let's talk more about the subsequent event evaluation period. So this is the period between the year end and when you issue the financials. A filer with the SEC, Securities and Exchange Commission, is required. So this is large public companies, right? They are required to evaluate subsequent events through the date financial statements are issued. Other entities, so non-filers with the SEC, must evaluate subsequent events through the date the financial statements are available to be issued. So as this says here, that's an important distinction for multiple choice questions, because your issuance date, we talked about before, the criteria for it, the available to be issued, that they're just going to tell you, let's say that, February 20th, the financial statements are available to be issued. So non-filers can follow this rule, filers are this rule. So remember that the financial statements are considered issued when they have been distributed to users in a format complying with GAAP and when they are readily available to the majority of statement users. We talked about that before, just to reiterate it here as well. If the company is not an SEC filer, the entity must disclose the date through which the subsequent events have been evaluated. So if you're not an SEC filer, you need to say what that date is, which includes if that date is the date the financial statements were issued or available to be issued. So this one, again, could be a multiple choice question about it. We need to specify the date that we stopped looking for subsequent events, because if a big fire happened the day after the subsequent event period, well, you want to let it known that, hey, we didn't really look after that date, so there's nothing, that wouldn't have been included, even if it was a big deal. So not required for SEC filers to avoid potential conflicts with current SEC guidance. So just to recap that there, SEC has a restriction of needing to evaluate through the issuance date, but they do not have to disclose the date, whereas the non-filers are through the date they are available to be issued, and the non-filers need to disclose the date. And this is because SEC guidelines are a lot more strict. Like, they have their own dates they need to follow. So it doesn't want to conflict with SEC rules. Whereas if you don't follow the SEC, you don't really have extra rules to follow. So you can specify that and it wouldn't really mess anything up there.